And here's a look at where markets ended the week after we got two big inflation reports ahead of the Federal Reserve's highly anticipated meeting next week. Consumer prices increasing by the lowest level in more than 3 years, while producer prices came in slightly higher than expected. We also saw jobless claims inch up this week. Joining me now, former Dallas Federal Reserve President and Goldman Sachs Vice Chairman Robert Kaplan. Robert, it's great to see you. And, you know, the futures markets are fully expecting this quarter-point rate cut next week. But David Solomon, the CEO of your company, Goldman Sachs, says that he could make the case for a 50 basis point cut based on the softening jobs market. What do you make of those comments from him?
If I were in my previous seat at the Dallas Fed, I would be going into this meeting and advocating for a 50 basis point cut. And the argument is that at this level of inflation, 2.5, 2.6% on the PCE inflation, we've made a lot of progress. I'm worried that we're seeing some weakness in the labor market. I don't think we're heading into recession, but we've got to monitor that weakness. And if I could look at it with a clean sheet of paper, I would say the Fed funds rate today would be better positioned at 4.25, 4.5 than 5.25, 5.5. And I'd be trying to get there over the next several months. I think the Fed's probably a meeting or two late in starting the cutting process. I think it's manageable. But all those factors would make me want to cut 50 to start this process and make clear in the press conference that future moves will be more measured, more moderate.
Okay, so let me ask you this. The criticism is that the Fed is behind the ball here and that they're the laggard in the world because, you know, the ECB had another rate cut this week. So does that type of rhetoric or criticism, does that affect decision making if you're inside of the Federal Reserve and you're sitting in that meeting next week?
The rhetoric doesn't affect me, but I do believe we're probably a meeting or so late, and I'd be inclined to want to rectify it and be on the front foot, and particularly since I think we have room to cut the Fed funds rate, I'd rather front-end load it. And in particular, I want to give relief to small businesses that borrow based on the Fed funds rate and other borrowers that are very sensitive to it. So that's why I'd be advocating that.
Well, financials were slammed earlier this week after David Solomon said that Goldman Sachs is going to take a nearly $400 million hit to third quarter revenue as it unloads that consumer credit business. And then he also warned of a 10% drop in trading activity and a reduction in private equity investments. So what does this say about the financial sector, the consumer, and about Goldman Sachs in particular, that consumer credit business, probably not a surprise to most Wall Street investors, that you've decided to unload that portion of the business? Is this a turnaround, do you think, for Goldman? Is this the moment the company turns around?
Well, so we've taken some action over the last year, as you said, in our consumer business. We are very optimistic about the future in our global markets business and our asset management business. I think from quarter to quarter, you're going to see ups and downs in all those businesses, trading being one of them. But I think over the horizon, we're optimistic about our future and optimistic about the opportunities in these businesses.
Robert Kaplan, I always appreciate you joining the program, and thank you for being here. And there's a lot to watch. We'll see how the Fed does next week. Thank you, sir.